Welcome to Trading Lounge and the European FX crosses, and starting with the US dollar index here. The main point here is we are looking for a nice tested support on 9,500 or 95 in on other platforms, but yeah, we can see that this little move up here can be counted in different ways, so I'm not really particularly sort of interested in that just yet. But what I am interested in is this market finding support on that 95. That's really the key to everything at this stage. And the move up here is traveling quite nice. Like I said, it can be counted in different ways, so I don't particularly want to get into that at the moment. What I do want to do is just simply observe what's occurring at this level here. So, you know, the market's come up to this level, it's reacted in a corrective pattern here. So that means it will make new highs above here. This little move up here appears to also be impulsive as well. So it may take a little time to establish a nice support on this particular level, but it's doing all the right things. So what that means is we're still expecting a stronger US dollar index dollar and weaker pound, weaker euro. So we're still looking at the short side of those markets. So let's go through those, starting with the euro US. The wave 2 up through here, and we're looking now, all this is down for wave 1 here and back for wave 2. Now wave 2 hasn't actually pulled back the 61.8% retracement level here, so we need to be just a little bit mindful of that here. It's gone up to the 50 and the 60 here, but I think that we can put this here for the time being. Now let's just drill in and have a little look at this now that we're on the same sort of page here a little bit. So that was our box that we were going for wave 2. So it's a bit short of that, but that's at least we've got some type of correction. We've got, the main point here is we've got a correction. We've got an A and a B and a C wave here. Now, yes, this could get it could get larger as such, but in that regard, making all of this just the A wave and the B wave here and a C wave up here, I don't think that's the case, because the move down through here appears to be in 5 waves, and then if that was going to be 5 waves down, well, if just splitting hairs here a little bit, if that low gets taken out there, then we'll continue down basically in a rough way, because we're going into group 1 here. We'll get into that in a moment. But as it stands at the moment, this can be an A wave to here, a B wave onto that low there, and a C wave into this box here, and then down from that point there. Okay, so that's the likely path that we're going to take. If this green line through here becomes the retested resistance, like the market moving through it, coming back up and testing it and failing from here, then you can also use that to go to the downside. I'll just have a look on a 5-minute chart here. I might just go into a tick chart. So the tick chart's got 100 ticks to it. Let me just get my bearings here. So this is the move down, which could be a B wave. I understand that, but at this stage, this move down, if I can just open this up a little bit, so we can work backwards here, be a little bit easier actually. So we've got 1, 2, 3, 4, 5 here, A, B, C. So we've got this move to here. Then this is all the 3rd wave here, and then this is okay, so yeah, it's fine. So we've got 5, 4, 3, 2, 1, and then 1, 2, 3, 4, 5 here. So we have this quite clear 5-wave structure here, okay, and of course the 61.8% retracement level is obviously a little bit higher here in this space here, but the previous wave 2 never got there. The other point with this is that this little rally here is also is corrective, because we've got 5 waves here, then we've got an A wave here, a B wave in 3 waves here, and a C wave here. So we've got basically got an A and a B, and then 1 and 2 and 3 and 4 and 5. So we've got an A, B, C pattern here. So we can go down from here. Now, let me just sort of drilling in here a little bit further. So where are we here? So that's 5 waves to that point. So at this stage here, we know that this is corrective and the market could just go straight down from here, but corrective patterns are always a little bit daunting. So this is possibly an A, B, and C wave to here to make up the B wave. So we've got an A wave, a B wave, and long as that low there stays in place, then this market can work up in terms of, well, 5 waves back up into this area here, so to speak, and then drop from that point. So that's a possibility. The other possibility is that that we're working to the downside, so we can look at this low here. I can't draw in this space here when I'm on the tick chart, so it's possible that this is down for 1, back for 2, down for 3, back for 4 here, and then making wave 5 down through to here as well. So if that's the case, then we'll get a bounce back off here. So from that high here to this low here, I have to draw in this space here. So if we get 5 waves down here, then we're likely to get a corrective move back up, and that high, that low there, and this high here would be a balance point for that correction before we move down here again. So in a way, the bearish move is underway, and it's really just about it might take you 2 or 3 times to actually sort of get in amongst all of this, but the main point is that we've got 5 waves down here. At worst, what would happen is that this corrective move here, it comes back up to the 50% here, which is good, and that's probably all it needs to do. And this is corrective, so we're going to make new lows below here. Like I said, the worst that could happen is that we get a move from here back up into this area here. So an A wave, a B wave, and a C wave back up into this area, and then drop from there. So this means that you need to leave the stop out of the way here. That's what it really means. But it's a long way from from there to there, I guess. Let's clean this up here. So that's that's that. Let me just go back into this 15-minute chart and pick this up a little bit, clean this up a bit, and we'll just go back over what we've done here a little bit as well. So as it stands at the moment, if this low here gets taken out, then we'll come down to this low here, or this this number here, and get an A and a B and a C here, and then down from that point. If that low stays in place here, that market can work up here for wave C into this space here again, and then drop from there. So that's what we're up against. So they're the triggers that you need to work with, basically. If you're short already, that's fine, leave the stop up there. The good news is that this particular move here is in 3 waves. It's corrective, so this low will be taken out at some point in the future. That's the main thing with all of this. So basically, you got to find yourself, you got to find a way in for this market. So always less is more, and in terms of position sizing, and there's a long way to go with this to the downside. So when you look back at this in weeks to come, you'll go, oh God, I wish I just put in a little bit here and added and added and added, rather than sort of shoveling it all in and trying to get the exact right turn and all the rest of it. So Yeah, okay, so let's move along a little bit. The pound, the euro pound here, basically I need to line this up with the euro count. So I've made some adjustments here. Now, I know that that we're talking about going short on that break then. If you've taken that short, that's fine. But I would put a stop above this one here, because it's possible now that all of this here is wave one, and an A wave, B wave in here, and a C wave up into this sort of area through here. So yeah, it's possible to come higher through here. So you just need to be a little bit mindful of that, and we'll give this another session. I mean, if this low gets taken out, then by all means you need to be short under this level. That just goes to, you know, without saying really, because we want to short new lows, and we're looking at this being a corrective pattern here, and it simply can move higher as it stands there. So we'll leave that there. I'll just save that because we want to go short under that 73 there. But at the same time, we want to find a higher point here to short from here. So, okay, the next market is the Euro Yen. Now, on the 15-minute chart here, there's a few things here. I think we're just stuck in a big corrective pattern here somewhere, unless this is the top here, but it's, you know, as it stands, this is the top. So here now we need to look at this as an ABC pattern to here, but at the same time I can see three waves here. It's possible that this could be up for wave one here, back for wave two, and then we're going up for a third wave up here, and then in the third wave we've got wave one and wave two here, and then building up here. But I just want to stay with another pattern at this particular point in time, which would be, well, we could look at it in terms of, say, an A wave to here, a B wave to here, and a C wave to here in 5 waves. So 1, 2, 3, 4, and 5 for the C wave here, and then pulling down from this point here. So I mean, if this market here, if this move down here, moved down below this one here, then I could have looked at this as being an A and a B and a C wave here, and it probably is, you know, but I just need to be a little bit cautious in what I say or do here. So let's just leave this one for the time being. There's probably better markets to look at, but I was thinking that 1, 2, 3, 4, 5 and fading from here and moving back down. So let's just see what happens here. Like I mentioned, there's better trades to be had, and one of those would be this one, the pound US here. So as you know, we've been looking for a top, and I think that top's in play. We need to get a breach. Well, there's lots of ways to do anything, but we were thinking of taking that low out here. So it's probably, you know, with these things, you know, if you're there at the time, that's good. If not, then you need to put an order in. But if you're there at the time, it's good to get one on the break. But remember that, you know, when you've got a situation, a low like that, you know, 90% of the time, the market's going to like come through here, then come back and check it. And that reference point is your safety point, and then short from that reference point, you know, because that's where the demand will be, that's where the orders are, that's the support. So, you know, 1 point below that as a trigger is a much safer way of doing things. Of course, you could also take the angle here that we've talked about before. So we'll just cut through to the 15-minute chart here, and looking at it like this here as well. So yeah, so we were looking for wave 3, an A and a B and a C wave here, and then we're looking for wave 5 to make a new high above here. It hasn't really made a new high here. Well, yes and no, depending on what platform you're on and all that sort of stuff, you know, different bank feeds and whatnot, and aggregates and providers displaying different things. But this move down here is developing quite nicely as an impulse wave. So I would expect some sort of bounce off the old lows here. So if you're not short already, that's fine. You know, and once again, you know, if on this bounce here, if you can see 3 waves, then, you know, you can look to short, but you'll need to see a bit of a sell-off and all the rest of it, and meet the target and so forth. So if we looked at this as the 50-60% retracement level sort of area into here, this is where it can come back up to. Yeah, so I'll leave that with you, but shorting the bounce basically, you know. So I think the euro US dollar is worthy of a short. I think the pound dollar cable is good for a short. This one here, the pound yen, it's probably good for a short, but I have to say that, you know, I was looking for an A wave and a B wave and a C wave here, and yeah, I'm just a little bit, it's probably okay actually, and this C wave here hasn't panned out as a nice picture as I thought it would be, but I think a break of this trend line here as a resistance, it will come through it and go back up and test it, then you can look to short it in that way too. So, you know, if this is the line here, you'll see some sort of move here, and normally you'd see some sort of thing like this, maybe like that, and then you just use these lows here, and any breaking of those lows, then you're on your way from that point, you know. That's the good thing about this trend line. So we're expecting it down. It's just that I don't have a beautiful 5 wave structure up here, that's all. So we'll just need to allow it to show us some weakness here so we can use what we see there when it occurs. The US yen, we were looking at the long side for this because we had this nice 5 wave structure here, which we picked up off from the US dollar index as well, and we're looking for an ABC correction. It's possible that this wave 2 is either here, even over here as such, but I'm just going to leave it here for the time being, and I'll just see a little bit more development here. But if you're long now, that's fine, you can put the stop here. But the next situation really is adding to this long trade here. So the normal course of events, and, you know, pinch of salt and all the rest of it, the arrival, some sort of reaction here, and then the first high above the level, normally failing to find support on 120.3 in this case here, and then would see some sort of corrective move here, and then we'll look for some support here and so on. So kind of got to go through this. If I'm wrong, because this is just the sort of, you know, working the averages and things, and this is sort of the normal thing that sort of happens across a level, but at any stage, if this level here, the 0.3 here, the top of group 1, becomes some kind of really nice support that you can see, then you know you're going to go straight up from that point, and then you need to be long at that point. Do you know what I mean? And that way you don't miss the trend. So we always wait for this, okay? You know, that accumulation process is important for the next distribution of the trend, but of course we don't want to miss it, and our strategy for not missing something is the top of group 1 as always. Okay, that's it. So thanks for tuning in. Cheers.